Hi, Market Insights watchers. We do hope your week is off to a great start. I'll be recording today's video on Friday, July 12th. So we look forward to talking to you more next week. But in the meantime, in Market Roundup, a Federal Reserve confidence boost. Well, June CPI numbers are in. Here what the data print revealed and what's possibly coming next. And in tech megatrends, small cap stocks are breaking out. We'll discuss what stocks stand to gain. And in Crypto Corner, hear what's new in the crypto world. Always something happening there from Ian. And of course, I always say this, while you're here, please remember to like and subscribe to this YouTube channel. So let's begin. Well, hello there, Ian. How are you this week?
I'm doing better, Amber. I know a number of our readers wrote in concerned about my health. Yeah, we had a little bout of COVID last week, but everyone's feeling better. One of the weird symptoms of this strain is getting pink eye.
Ah.
We've been dealing with that, but everyone's on the up and up and enjoying the cooler New Jersey temperatures. Yeah, thank you for everyone that wrote in and was concerned about my health. But yeah, we're doing a lot better this week. Thank you.
I'm glad to hear that you're doing better and on the mend. Okay, well, before we begin, if you haven't done so already, please, everyone, check out Ian's latest presentation on TechBio, the TechBio Revolution. I know we should all be familiar with the term biotechnology or biotech for short, but tech bio is a brand new category that's emerging within biotechnology, all thanks to AI, artificial intelligence, and machine learning. It takes new cutting edge technology and applies it to the fields of biomedicine, such as healthcare and biosciences, and of course, drug discovery. And by 2030, get this, the $1.777 trillion biotech industry is projected to reach $4 trillion, nearly $4 trillion, in no small part due to the rise of tech bio. We have a new presentation out right now that covers everything that you need to know about this new megatrend and how to invest in it with three small cap tech bio companies that are revealed in these three special reports focused on AI and chemotherapy, 3D printing, and nanotechnology conquering the flu. So each of these small cap stocks from the Extreme Fortunes model portfolio, they have the potential to see some outstanding gains in the future. So please be sure to check it out in the link accompanying this video, or just if you're on a YouTube channel, just check out the description section right below of the video you're seeing today. So Ian, I think that's a great idea, the tech bio concept.
Yeah, I didn't make that name up, by the way, just so
You
everyone knows. We talk about the development of AI and how Microsoft and Google and Amazon are they're known as the hyperscalers, which means that they're putting the tens of billions of dollars to work to build these data centers to run these complex AI algorithms.
Right.
That's the development phase. Now we're going to start to see the implementation phase. Like, where does AI fit into our life? Where does it fit into civilization, essentially? And there's a lot of ways that AI can improve and optimize businesses. The easiest thing to think about is how AI is going to become a chatbot for businesses, so handling, most of customer service inquiries. But then there's this idea that you can take these powerful AI algorithms and use them to improve health outcomes. And one of the ways to do that, obviously, is through drug discovery, because in order to come up with these new types of molecules, you need to analyze, millions, hundreds of millions of different data sets, the way that molecules bind against one another to create these new drug compounds. And the machines can do it much faster than humans can. And we're already seeing some of these drugs go through FDA trials that have been discovered essentially by algorithms and not humans, because the research can be done so much faster. So, it's a very exciting time to be alive, in the sense that we're having this huge boost coming from AI. The other thing I want to talk about, and are we going to talk about the CPI? Why don't you cover that? Because I want to give my analysis on it and about why it's so important for small cap companies, especially the ones that we're targeting in the Extreme Fortune service as well.
Of course. So everyone, let's turn to Market Roundup. The Federal Reserve Chair Jerome Powell used two words to describe June's Consumer Price Index report, And those words were really good, quote unquote. June CPI showed the core CPI gauge, which strips out food and energy prices, actually cooled to its lowest pace since 2021, boosting the odds for a Federal Reserve September rate cut. Just some details here. Core CPI rose just 0.1%, which is the smallest advance in 3 years. And on a yearly basis, core CPI rose 3.3%, which is less than expected and the least since April 2021, which is when the historic run-up for U.S. inflation that we've witnessed actually essentially began. Now, checking the Fed rate cut probability table, Ian, interest rate futures now showed a September cut as fully priced in at a probability rate of 94%, with the possibility of at least 2 reductions seen by year end. So continue your thoughts there on CPI now that we have those.
Okay. So we talked about this a number of weeks ago, and I said the first time that we have a weak CPI print, small cap stocks are going to go bananas.
Yes.
And what happened yesterday? We had what's known as a 6 standard deviation move in the difference between how much small cap went up versus it, an outperforming large cap. And so yesterday, on Thursday, you had the Russell 2000 up 3.35%. You had the S&P 500 down 0.75%, which is a difference of over 4%.
Right.
That is the first time this has happened since 2008. Okay. And before that, there was only a day in 1979. So we're going back. Yesterday was one of those occurrences that happens every 15, 20 years or so. And the reason why is because when interest rates are high, it benefits mega cap tech companies. And and I'll explain, they have lots of cash on their balance sheet, right? So you look at Apple, which has literally hundreds of billions of dollars of cash, Google, Meta, Amazon. Rates are high, they can take that cash and put it in a 5% money market interest instrument and earn interest on it. But when rates are high for small cap companies, they have a harder time raising capital.
Right.
And so there's this kind of dislocation in the market when rates are high, where it's like the mega cap companies outperform the small cap companies. On top of that, these called pods hedge funds. Okay, there's lots of hedge funds out there, and many of them deploy the same exact strategies. And the biggest trade for the last 2 years has been being long these huge large cap companies and short the small cap companies that have a hard time obtaining cash, right? And you do that because that has been the trade, right? And you've seen like all these small cap companies that did great in 2021, 2022, kind of fallen by the wayside and been sideways for a while. What happened yesterday is we saw a sharp reversal in that trade, where the large cap companies sold off, small cap companies and all these hedge funds that are short are now getting squeezed, which is normally the sign of the beginning of a new rally. Most bear markets end with a massive short squeeze, getting everyone out. In a lot of cases, it resets the look of the chart and brings back momentum into the stock. And I do think that yesterday was a huge turning point because now, we brought the rate cut. It's like we're definitely having a rate cut in September, if not sooner. And a lot of people are going to say, "Well, this is just to influence the election and whatnot." But you're seeing in the data, CPI was actually negative last month. The PPI, the headline number looked a little hotter than expected, but if you look at the actual components, it looked better than the original estimate. And so, I think this trade is going to continue. Now, the idea is to get back into small cap stocks, which is why we're opening up the door to the Extreme Fortune Service right now and recommending, 3 stocks that you should buy in that tech bio space that I think are really going to capitalize on this, what I think is just, a major move that's just starting right now in the small cap space. So the net effect is rates are coming down sooner than people anticipated 2 days ago. That's going to benefit small cap stocks the most. It might adversely impact large cap stocks. My belief is they're probably going to trade sideways for a bit, but I think there's going to be a great outperformance into the rest of the year with small cap stocks. And I've been saying this too, for quite some time. I think we've probably been wrong for the last 9 months on the outperformance of small caps over large caps, but it really was only a matter of time until we saw that CPI break lower and we're just opening the floodgates. So that started yesterday, this move in the small caps. And one last thing I'll say is that if you look at the small cap chart, and we can show everyone a chart of the IWMs,
Mhm.
this has moved basically sideways for 2.5 years, right? We've been in this kind of sideways move in the IWMs, whereas the Nasdaq and the S&P 500 have gone up. It's now time for these small cap stocks really to play catch up. So that is definitely the sector that you want to focus on for the rest of the year, I believe.
I concur, Ian. Patience is a virtue, and I'm so glad to see small caps are moving, and that really does blend well with the extreme fortunes in tech bio stocks. So we're
Yep.
going to move ahead to crypto corner. What's happening in the
Okay.
crypto market this week, Ian?
So, I mean, a couple of things in Bitcoin, like we covered last week, where Germany was selling their Bitcoin. So we saw the price slide. It has recovered since then, so it's kind of flat on the week. Ethereum is down maybe 2%.
Yes.
It looks like the Germans are almost done with all their selling. They've been cleaned up. The one piece of news that I've been tracking is that Goldman Sachs had an announcement a couple of days ago that they are planning to launch a batch of tokenization projects by year end.
Mm-hmm.
Okay. And they're doing this because their investors are interested in these digital assets.
Mm-hmm.
And what's really interesting about this is they're looking for tokenized money market funds, which there are a couple that already exist, and our crypto readers should know about them. And they also want to do real estate. Okay, so the idea of tokenizing real estate, which is a big investment idea, is that imagine if you're trying to buy a piece of commercial real estate, right? You have to put together basically a syndicate of investors. You would have to keep track of that one way or another of their investments. In this sense, you can say, here's a $10 million piece of commercial real estate. Each token is worth, $100 investment in it. And you could have many more investors than you typically would in these type of structures. And it'd be a lot easier to track using the blockchain. And it also would create a more liquid market for the security. So basically, you can take anything and turn it into a security and tokenize it as long as there's a market for it, as long as the people who are willing to buy and sell it. And I think that, eventually one of the biggest drawbacks in the stock market for the last 15 years, especially when it comes to growth, is that the venture capital markets have had like ample amounts of capital. So if you look at the return of the S&P 500 between 2010 and 2020, it was something like 250%.
Mm.
But if you look at the return of venture capital between 2010 and 2020, it was like 800%. Venture capital just blew away, regular stock investing. And the reason why is because a lot of these big growth companies did not go public at an earlier stage like they usually do because they had access to more capital. So you think about Uber and DoorDash, which went public at like 50 to $100 billion, whereas in past cycles we would see those companies go public at like $5 to $10 billion.
Mm.
And from Uber's perspective, if you're a private company, like why go public if you can just raise another round and somebody's going to give you another $5 billion, right?
Right.
I believe what we're going to see with tokenization is that investors will have access to these growth companies earlier on.
Mm.
And so instead of them having to go public and have like a syndicate and have to pay the bankers all these fees, they
Mm-hmm.
could just float a token that represents equity issuance in their company. And so I think in the long run, and I don't think this is going to happen, in the next couple of months, but I think in the next few years, some of these like AI startups that have gone from 100 million to 5 billion. I think the recent round of Anthropic, which is the big private one, is like 20 billion. You'll see investors, not just institutions, being able to get into it because of the tokenization of the actual company. And so that's something that it just bears worth watching. And I think, could really benefit retail investors in the sense that they're missing out on these huge private market gains. I mean, you look at SpaceX, the value is like $180 billion.
Of
It's
course.
not public yet. It's going to go public, and you're going to pay, $180 billion for a company that just a couple of years ago was $10 billion. You missed the whole move.
Mm.
And so I think that eventually we'll have this tokenization aspect where they actually tokenize the company instead of selling shares of stock, and allow anyone who wants to buy it and sell it on the markets easier and earlier access.
Well, that is.
That's why, last point is like, that's why it's great to see Goldman Sachs jumping in on this because, you want these kind of efforts to be spearheaded by the banks.
They are the leaders. So this is the wave of the future. Tokenization. Get in early as you can to make those gains. Well, everyone, that's it for this week's Market Insights. If you have a question for us to answer, please email us at marketinsights@banyanhill.com.
Thanks, Amber. Thanks, everyone, for tuning in. We'll see you next week. Take care. Bye-bye.